Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy.
All right, folks, here we are on Tuesday, December 10th. We're going to take a look at RVPH. So, a few looks at RVPH here. We have this support and resistance level, and then we're going to take a look at some other indicators here on the Weeble chart. Then we'll flip over here to the Think or Swim study, and then we'll call it a video. So first things first, here's the levels that I have on RVPH. Now, I put some sort of outsized move levels in here, meaning if it just rocket ships really quickly again, or if it pulls back really aggressively, I put in levels to sort of try to accommodate for those in case we don't get back to RVPH very soon. So if we go rocket ship style, the upper bound that I have right now is 531, and then we could come reassess if it gets through that. The lower bound, if it really just disintegrates, 103. Now, the levels in between are what are going to feel more relevant for the time being. So if we look at just, say, yesterday and today's price action, here are the relevant levels that I see it. Coming in hot yesterday, popped up here, plus 58% on a 10-minute candle. And I have 430 here on the chart. It topped at 428, pulled back through a bunch of levels immediately, and tried to basically wrestle with this 265. That continued into the after hours, needed to dip down and bounce off of this 198 at one point, and then carried on. Spent most of the day then wrestling with this 265 again. So yesterday and today made a late day attempt toward this 305, and then since has pulled back and is resettling right along that 265 level. So what this says to me, short term, as it pertains to this run, overcoming that 265, like just getting a quick, reconfirmation of support on that, and then just pushing hard against that 305 is imperative if there's potential for a sustained bullish run here. Now, there are a lot of levels in between where no price action exists recently. So those levels, if it does get through 305, would be 330, 356, basically 390, and then 430. So if it continues to move, and it moves, more, let's say, reasonably than this, those are sort of the stair steps that I would look for. And those are still huge percentage gains, but it's, it's a little bit more systematic and sustainable than, this chaos here. Now, if it does lose 265, there's some short-term presence, I'd say right around here, about 230 to 234. I'm not going to put that in because that doesn't feel like it's as strong of a level yet. And so if it does lose 265 and doesn't catch anything around that, like 230, 234, then I have 198. So that would be sort of that psychological sense of, okay, it's getting pushed below $2. Does that really feel warranted, or are we going to push it back above $2? Now, zooming back out to where these levels are coming from, you do see all of this previous price action, and there's actually a lot of really good repetitive action to get these levels from. So that's why I feel pretty confident from these periods here, and then this really lengthy period here where there was a lot of motion through those ranges. You do see some ranges where there's pretty thin action, and it did sort of repeat that, sort of mirrored that in the recent price action. But I wouldn't be surprised if it does sustain at least some portion of this recent push if it starts to sort of develop some more significant support and resistance levels there. Now, I'm not playing RVPH at the moment. If I were to, I would actually gravitate toward this view. Like, this would be my mainstay for the time being. Because to me, this is actually more interesting, because if you've seen any of my videos before, I'm a big stickler for this gray 183 EMA. You see previously, right, it was sort of wrestling with that, dipped a bit below, tried to push above, just continued to dip below, push above, right? It kept doing this weave. And then when it rejected, and here it could have done another weave, but it didn't reach it that's really where then the sell-off accelerated. Obviously, it was already selling off a bit into this, but then that's where this really sort of like cliff dive came from, and then you just had an incredible amount of distance between the price action and that 183 EMA. What you see now is in sort of like two giant leaps. It has jumped up through that 183 level, but is sort of pulling back a bit toward it. Now, what we see with the shorter term EMAs is the 8 above the 21, 21 above the 34. So those are short-term bullish configuration right now. What's about to happen, if it can sustain some legs here, even if it's relatively sideways, it should start to drag that white 8 above the 183, getting then the short and the longer term EMAs into a full bullish configuration. But that would be the next thing that I would really look for, this 8, 21, and 34 to get dragged above the 183 EMA. Now, I'm reluctant to say this, but I will. But let me contextualize it for just a moment. RVPH, jumped, like I said, it leaped above this 183 in two huge candles. Obviously, there's something to that, right? And I'm not getting into the catalysts and the news and fundamentals and all that jazz here. I'm just as it pertains to the chart. So, set that aside for the moment. From a chart perspective, what wouldn't shock me would be if it did come down to retest that 183, and then if it did have significant bullish momentum and pressure to continue to exhaust, just use that as sort of a launching pad, right? And then in the zoom out 2 months down the road or something, you would see that as the strong catalyst mover from the chart perspective, right? That it came down, retested the 183 or got very close, and then just took off. Now, the reason I'm reluctant to say it is two reasons. One, it's all the way down here at 177 right now. And so if it did pull back that far, I would maybe question how much folks will continue to step in, or if they would fear that it's just going to do one of these what I call sad face formations, where you get this like really quick rocket ship up and then almost as equally as quick of a rocket ship, or I guess not a rocket ship, a drill back down, right? And it just makes this sad face. So I don't know if retail and other investors would just get too rickety too quickly, right? To be able to allow it to pull back that far and still then step in en masse and buy it up to push off of that level again. I don't know. The other thing is, if it does continue to drag these short-term EMAs up through the 183, it actually wouldn't be that. It would actually, from a bullish perspective, would be a much greater sign of bullish strength and momentum for it to not need to come down to press the 183, but to work off of the 8 and maybe the 21. Again, I'm talking about if it's feeling like it still has a significant amount of bullish momentum. I would want it to ping off of this white, maybe ping off this peach. I'd feel less super if it needed to touch the red, but that's not the end of the world. But if it drags these EMAs above and it makes contact with them, say here, and then continues on, then it would have gravitated down toward the 183, but it wouldn't have needed to bounce off of it or retest it. It would have retested the short-term EMAs that it dragged through these huge moves, that it dragged up above the long-term EMA. So that's what I would be looking for if I'm going to feel like there is sustained bullish potential here. How long it sustains, I don't know, but to feel that there was like additional bullish momentum that needed to be exhausted before any sort of greater pullback were to take shape, that's what I'd want to see. Drag these short-term EMAs up above the 183 and then ping off of ideally just the white and then carry on, or potentially off of the peach, that EMA 21. So to me, if I were wanting to be simple and yet feel that I was having an effective trade strategy, this is the simple view that I would look at, and that's what I would be looking for. I'm curious to see the volume. Yeah, obviously where it launched off of here, there's huge volume coming in there. It does get, repetitively thin up here. And so that'll be interesting to see how that evolves over the next few days. The other question I would have is the position cost distribution, which is not available for some reason. I don't know that I've ever seen that, actually. There must be maybe a very normal. Okay, there you go. I guess the reason is you just have to re-click it. But even with this great move, or these few great moves in the last few days, there's still only a little over 10.5% total profited shares proportion. And 90% of the cost range is in the 192 to 381 range. And if you push that down to the 70% cost range, folks are like just a little bit profitable if they're on the low end of that. So, to the degree to which folks want to or have a tendency to hold bags and just wait it out until they can turn those bags into bags of nickels or silver or gold, yeah, maybe that will actually work. Maybe this will actually work in those folks' favor. I don't know, but or not in those folks' favor, but in bulls' favor. Now, on the think or swim side of things, I actually think this is sort of the least compelling, but I'll just go through it quickly. Once it got above the December ATR call trigger, this blue line here, it just rocketed to and through this +1 ATR. That's situated at 262, so maybe it settles around there. If it does want to sort of do anything in line with this think or swim setup, it doesn't have to, obviously. It may be fairly irrelevant. If it comes into January as it stands now, though, this will shift, and we're still just a third of the way through the month, but this would put our call trigger in January at about 288, so a bit above where it is at the moment, and give us a +1 of 403. It's been so relatively flat through these ranges for so long, just meaning it kind of sticks to the baseline ATR month after month after month. There's a little dippy here, but then it sort of offset that by being a little bit punchy here. But mostly just kind of gravitating back toward the baseline ATR. So not a ton of history to go off of to gain a lot of sense or clarity from that. So again, that's why, for me, if I were, like I said, if I were really, really fixated on this stock, I would be either looking at this and these levels, especially zoomed into the intraday, to see how it's moving off of them. That very important 265 level that we spoke about, which at least appears as though it wants to be an important level, whether that means important that it's going to be its rejection point and it's going to head back south, or it's going to be its reconfirmation point and it's going to get some boosty moves toward that 305. This one, or like I said, my real go-to for the moment, for the current setup, would be this guy here. And, I'd be really keen on these bullish crossovers and what happens as these EMAs make contact with this 183, which should start to happen tomorrow, barring something really unforeseen, which I guess could happen, being what this move is. But yeah, that's just as a quick recap, those are my 2 cents and what I would be doing if I were in this one here. All right, folks, so I hope that your trading week is off to a good start. And as always, I appreciate you watching, and I will see you in the next video.